Hello and a warm welcome. You've joined us on Market Cafe right here on ET Now. I'm Ashesha and with me is Kanishka Sarkar, who is joining us from our Delhi studio. And this is a show where we take you through all the global market update. We'll put the spotlight on all the stocks that will be in focus, either based on news or based on brokerage reports and all other news stories that you ought to know this morning. But first up, let's take a look at the global markets. And Kanishka, let's first start with the US market update.
That's right, Ashesha. Very good morning to you. First of all, let's take a look at how the stocks performed on Wall Street overnight. In the broad market, S&P 500, that advanced about 0.5%, posting another record close, while the tech-heavy Nasdaq Composite, that also rose to a fresh all-time high, gaining nearly 0.5% there as well. The blue chip Dow, that climbed 275 points or 0.6%. These moves come as Canada has walked back its digital services tax in an attempt to facilitate trade negotiations with the US. Now, this was after US President Donald Trump said on Friday that he would be terminating all discussions on trade with Canada. Traders are now hoping for deals between the US and its trading partners, as that Trump's 90-day reprieve on his steepest tariffs is set to expire next week. Now, remember, stocks have made an impressive comeback after suffering steep declines in April after Trump's sweeping tariff policy pushed the S&P 500 near the bear market territory. But now the major averages have since made a sharp turnaround, with the broad market index closing the second quarter with a 10.6% gain and the Nasdaq up nearly 18% in the period. Now, though traders are now heading into the second half of the year with stocks at almost record highs, some analysts remain optimistic that the market could surge even higher months ahead.
Okay, so that's as far as the US market update is concerned. Several indices continue to trade at record high levels. But let's also put the spotlight on the commodity market and oil market in particular, which continues to remain in focus. For the second day in a row, Brent crude has declined. In fact, it is down nearly 1.5% today to trade near $66.5 per barrel mark. And after the 12% fall that we saw last week, Brent crude is down another 2% this week already in the first two trading sessions of the week. Now remember, there is this all-important OPEC Plus meet that is scheduled to happen on Sunday, that is the 6th of July. And delegates are suggesting that OPEC Plus could be considering output hike of nearly 411,000 barrels per day for the month of August as well. And remember, this will be the fourth consecutive month of output hike that OPEC Plus could be considering, which means supply could increase in the global market, and that is precisely the reason oil continues to decline in the global market, currently trading near $66.5 per barrel mark. But shifting focus from oil to the yellow metal then, and that too continues to remain in focus. Although last week it was in focus, today it is trading with an uptick of nearly 0.3%, trading near that $3,313 per ounce mark. Now remember, last week it was down nearly 3%, but this week so far it has already surged nearly 2% in the global market. And there are two important news pieces when it comes to the yellow metal. One, of course, is the Federal Reserve. Expectations that perhaps Federal Reserve could go ahead and cut rates twice for the rest of the year, especially after US President Donald Trump's comments yesterday, and he has gone ahead and yet again criticized Jerome Powell. So perhaps we could see two more rate cuts for the rest of the year. And second, of course, is the tariff deadline on the 9th of July. So two important news pieces which continue to impact the yellow metal market. Kanishka.
That's right. That's how crude is faring, and the yellow metal as well. But now let's also take a look at how the Indian markets fared yesterday. The Nifty has hit a 9-month high, advancing for the fourth consecutive month. And sectorally, Nifty IT has secured its position as the monthly gainer, while Nifty FMCG is logged in as the top sectoral loser there. Now let's go across to Snehi to get us how the D Street fared yesterday.
Let's talk about the market moves that we've seen yesterday. Yesterday's market was lackluster at best, if you could call it that, because what started off as a flattish open for the markets, it only saw a one-way dip coming in. Although the dip was not all that much, it was a range-bound trading session. We still managed to close around that 25,500 thereabouts. There were names like Trent, BEL, SBI, and IndusInd Bank that held onto the strength the Nifty, but on the flip side, names like Tata Consumer, Axis Bank, Kotak Bank and Hero MotoCorp were the ones that were causing some pressure. Sensex too ended with cuts of about 0.5%. It was India VIX that was important to watch out for because we saw a flare of about 3% in India Wix yesterday. Nifty Bank was also lower by 0.2%. If you take a look at the broader end of the market, that is where resilience was being seen, because you had a 0.5% uptick coming in from the mid cap and the small cap space. So very good moves coming in from the broader end of the market. Other than that, sectorally, PSU banks were the big gainers in yesterday's trading session, and to call the trio home, the likes of Maharashtra Bank, PNB, UCO Bank, Bank of Baroda, Union Bank were gaining anywhere between 2.5% and 5.5% in yesterday's trade. That was followed by moves in pharma, IT. These were the only sectors with a tinge of media in the green. On the flip side, the biggest losers were led by Nifty Realty, Auto, Metal, FMCG and Nifty Bank, of course, where in Nifty Realty, some names like Lodha, DLF, Godrej Properties were all tanking in yesterday's trading session. Now, when we spoke to our expert Aditya Agarwala on closing trades yesterday, the advice that he had to give us was expect another range-bound session. So he's not expecting too much optimism in today's trade. He's looking at a bearish bias, and he's expecting Nifty to be at 25,300, which is a support level. So he's expecting Nifty to test this level. But on the flip side, he also says that Nifty could turn positive if 25,500 thereabouts is maintained on the index. So watch out for all of these levels, and well, yes, that is what the market setup is looking like today.
Okay, so those are all the levels that you need to keep an eye out on for today's trading session. But to understand what the macro setup is looking like, we are now joined by Mr. Santosh Rao, Head of Research and Partner at Manhattan Venture Partners, now joining us. Thank you so much for taking your time out and joining us here on ET Now. And first, my question will be with respect to interest rate environment, especially after US President Donald Trump yesterday again criticized Federal Reserve Chief Jerome Powell. How do you read this development, and what does this mean for Fed's next move, and back home for India and RBI governor's move as well?
Hi, good morning. I think President Trump making comments about the Fed chair is not unusual. He does that all the time, but he doesn't worry about that. I think what's really driving the thinking, or the market is thinking, that the case for cutting rates is getting stronger and stronger. The job market is kind of weakening. We'll get the jobs report this Thursday. It's expected to be about 110,000, which is lower than the prior month. Unemployment rate is going to tick up slightly. Inflation is coming down at this point. There was some little bit here and there, but it's generally soft. So I think the case for cuts, now the only issue is it going to be immediately, or is it going to be in the later half when the tariffs land and we get certain certainty as to where the tariffs are landing? I think that's the only thing holding the Fed chair back. So I think at this point, the market believes that the case is getting stronger and stronger for rate cuts. I'm in the camp that believes that 2 cuts this year is likely. He doesn't want to get too ahead of the whole inflation scenario. So I think he's going to keep it there, 2 cuts maybe, unless the things get really bad. And that's another argument. If the things get really bad, and if he cuts more than 2, that means things are really bad, and you don't want to give that message. So I think 2 is the right point. Later off in the year, I think that's where we are at this point.
All right. Hi, Mr. Rao. This is Kanishka also joining in. First of all, a very good morning to you. And that's the view as far as the Fed moves are concerned going forward in the year. You expect 2 more rate cuts going forward. But now talking about the markets, now S&P 500 and NASDAQ, they're both at record levels at this point. Now going forward, as we enter the second half of the year, what is your expectation? Do you think this rally could continue, especially given that July 9 tariff deadline looms? And also, is the rally expected to continue, or do you think volatility is expected to be back?
Yeah, volatility is the name of the game, and it's going to stay that way for a while, only because there's so many cross currents. At this point, the market is bumping against all-time highs. So, and in fact, it has crossed all-time highs in some indexes. So at this point, and earnings reports coming out next week and on are going to show that the earnings growth has slowed down. So that's a concern. I don't see any reason for multiple expansion. So my bet is that the market is pretty much going to be flat to down going forward until much later in the year when the tariff thing is done, and then we get a sense of how much tax cuts and what is the new budget and at what shape it takes in the end. So at this point, there are more ifs, ands, and buts. We don't have any definitive thing, but safe money is betting that it's better to be cautious at this point. Things can get really bad because the economy is slowing down, and we need a catalyst to really bump it up. And right now, I don't see one right there, other than lowering interest rates and really spiking up the market in terms of sentiment going forward.
Okay, so those are some of the triggers that could impact global market. But Mr. Rao, if you can tell us, what is your view on emerging markets, including countries like India, especially in the backdrop of tariff overhang, which could probably play out in the first week of July? How do you view emerging markets, especially India?
Yeah, I mean, the way tariff negotiations are going on, I think President Trump is in no rush. Of course, he has these deadlines, and they're very loose deadlines. So he's going to work around and try to get to a reasonable point. At this point, there are some sticky points here and there last I read. So it's going to be an ongoing negotiation. It's going to go way past July 9th. That deadline, I think it's pretty much a given that he's not bound to that number. But overall, I think the emerging markets should benefit from the falling dollar. I think that's a big thing, and falling energy prices. That's great. Those are big pluses for the emerging markets. So it's also for US actually. So net, I think the tailwind is pretty good for emerging markets. India, specifically, they need to sort out the trade deals, whatever sticking points there are. But in the end, I think it'll be an amicable settlement because Trump needs to show some development on the tariff side. He's made so many promises, threatened so many countries. He needs to come up with a good solution. He needs to settle this dispute. If not, he's going to look bad, and he has elections coming up next year. So he wants to pretty much get some wins in his column at this point, and he doesn't have much other than a framework with UK and China and maybe Canada. But other than that, he hasn't had any specific ones. So I think he needs to show that. And India, if he can come to a good settlement, that'll be a big win for him to show that he's doing well, that he's coming true on his word.
Okay. All right. Thank you so much, Mr. Rao, for all those views. And thank you so much for joining us this morning on ET Now and helping us decode the global market setup. Thank you. All right. Then moving on, it's time now to get a snapshot of how the F&O segment is looking. Pulkit is here is joining us with all the details.
Hi, Kanishka. So if we talk about the F&O setup, so let's start with the India VIX. For India VIX, the current value is around 12.8, while previously it was around 12.4. If we talk about the put-call ratio, for Nifty, it is 0.64 in the comfortable range, no need to worry. And for Bank Nifty as well, it is in the comfortable range, and the value is 1.02. If we talk about the index futures change in open interest, for Nifty, it is around minus 3.25%, and the trend is long unwinding. For the most active options, for call, it is 25,600, and for put, it is 25,500. For highest open interest, for put part, it is 25,500 and 25,000 both. The difference is very small, that's why I have taken both the strike prices. For call, it is 26,000 straight away. For Bank Nifty, the change in index future open interest is very small, that is minus 0.08%, and the trend is long unwinding. The highest open interest for put and call both, it is 56,000. If we talk about the long positions, for FIA, it is 36.4%, for DIA, it is 61.94%, and for retail, it is 51.78%. So these were the setups that were built yesterday for the F&O.
Okay, thanks so much for joining us with all those details. So that's how the F&O setup is looking like for today's trading session. But shifting focus to other stocks that will be in focus today, and Rabinder is now joining us to fill us in with all the details. Rabinder, over to you.
Whereas Bharat Electronic can be in focus, where company has secured additional order worth Rs 528 crores since the last disclosure made on 20 June 2025. Apart from this, Harbour Town can be in focus, where group company 25 West Realty to be merged with the company, and apart from this premier residential project located in Bandra with the gross development value of rupees 6,000 crore, and the project is SRA cum redevelopment project. So back of this, Uptown can be in focus. Moving to next, NCC can be in focus, where company has said that they have received order worth rupees 1690 crore in the June month 2025. Apart from this, Kalpataru project can be in focus, where company along with this international subsidiary has secured new order worth of rupees 989 crore. Moving to next, Prestige Estate can be in focus, where company announced the launch of its newest residential project, Prestige Pallavaram Gardens in Chennai, and the total seeable area of 3.1 million square feet with a gross development value of 3,350 crore. Apart from this, Bharat Forge can be in focus, where company has said that the acquisition cost in company has increased the acquisition cost of for AM India from 545 crore to 700 crore. And apart from this, board also approved the defense asset sale to Arm Kalyani Strategic worth rupees 500 crore. And lastly, Vodafone Idea can be in focus, where company has announced the next phase of its 5G rollout with the deployment now underway in 23 cities. So back of this, Vodafone Idea can be in focus.
All right, thank you so much, Ravinder, for getting us that list of all the stocks that are likely to buzz in today's trade. But it's time now to take a look at all the cues that we should be watching out for later in the day. Snehi is joining us with all the cues there.
Well, yes, we'll be tracking lots of cues to watch out for very closely, and the first of the month means it's time for auto sales numbers. So auto sales data is going to be trickling in for the month gone by, so watch out for that. Other than that, back home you have HSBC manufacturing PMI numbers that will also be out, and PMI data will also be received from global markets, because from the US you have ISM manufacturing as well as S&P global manufacturing PMI numbers, along with job openings data also coming out. Very important metric to be tracking to gauge the labor market of the US economy. In terms of Eurozone, you also have manufacturing PMI numbers out along with CPI, so watch out for that as well. From China you have Kexen manufacturing PMI, and from Japan you have S&P global manufacturing PMI along with the Tankan survey to watch out for as well. In terms of corporate action and board meetings, JSW Infrastructure will be trading ex-dividend, and in terms of AGMs, watch out for Polycab India. The company will be holding its AGM. In terms of other events, all eyes are going to be on a couple of important commentaries that we are going to be seeing. The likes of ECB President Christina Lagarde, Fed Chair Jerome Powell, BOE Governor Andrew Bailey, and Bank of Japan Governor Kazuo Ueda are all going to be speaking at a forum in Portugal. And Bank of England Governor Andrew Bailey is also going to be beginning a 3-year term as chair of the Financial Stability Board. So watch out for all of these cues very closely.
So those are some of the cues and events that you need to keep an eye out on today. Snehi, thanks so much for joining us. But we need to slip into a very short break. More news and updates coming up on the other side. Don't go anywhere.
When the stakes are high and the answers are elusive, there's one voice on a...
We speak down nearly 431 points. Kospi on the flip side though is up nearly 2%. That's Korean market for you. Shanghai is up with a positive bias, marginally up though, just 0.2%. 3449 is where it is currently trading. Hong Kong markets though are shut today, so we will not have any updates from Hang Seng Index today. On the flip side, ASX 200, this one has also started with a positive bias, up nearly 0.2%. And Nifty implied open is also suggesting a mild positive start for the Indian markets, up just 15 odd points as we speak. 25,629 is where the DIF Nifty is currently trading. So Asian markets are largely trading mixed, but GIFT Nifty is positive, indicating a positive start for the Indian markets. But Kanishka, let's now put the spotlight on other stories then.
That's right. Let's put the spotlight on RBI's financial stability report. Now, the report highlights that gross non-performing assets may rise from 2.3% in March 2025 to 2.5% this time. In fact, under adverse scenarios, GNPA could also reach somewhere between 5.3 to 5.6%. Anjali is here with all the details.
The Reserve Bank of India came out with its biannual financial stability report for June 2025, in which the Reserve Bank of India governor said that near-term global financial stability risks have increased, and that growth momentum currently in India is buoyed by domestic drivers, macroeconomic fundamentals and the prudent policies. He also noted that external spillovers and weather-related events could pose downside risks to growth going forward. Now, in its financial stability report, the RBI did conduct some stress tests, and in which they found that the gross non-performing asset, which is currently as of March 2025 at 2.3% levels, in the baseline scenario, these could increase to 2.5% level. In adverse scenario 1, that could be 5.6%, and in adverse scenario 2, it could be 5.3%. Meanwhile, the CRAR for currently at 17.2% in a baseline scenario could dip to 17%. In adverse scenario 1 could drop down to 14.2%, and in adverse scenario 2 it could be 14.6%. Additionally, RBI made some other comments saying that banks non-performing loans ratio is currently at a multi-decadal low, and that economy and financial system are relatively well positioned to bear with the tariff induced shocks, again referring to the geopolitical risks that are coming up. India's growth, as the governor also said, is largely dependent on domestic demand, and they also noted that the outlook for food inflation remains favorable as the prices have started to soften and the crop production is at record levels.
That's the latest financial stability report as released by the Reserve Bank of India. Anjali, thanks so much for joining us. But shifting focus then, at the International Business Forum's Development or Leadership Summit, Finance Minister Nirmala Sitharaman addressed the growing role of private capital amid global uncertainty. With foreign direct investment now fluctuating, she emphasized the need to break down barriers and unlock development finance. Let's listen in to what she had to say.
Mobilizing private capital is not merely a financing strategy. It is a development imperative. With coordinated action, thoughtful regulation, and shared ambition, as reflected in the Compromiso de Sevilla, we can ensure that private investment becomes a force for inclusive, sustainable, and resilient growth.
All right, then moving on, talking about the India-US trade deal, ET now learns from sources that the Indian team will extend its stay in the US beyond June 30th as the discussions are still continuing. My colleague Sumita Karir is joining us on the phone line to get us all the details. Sumita, good morning. Sumita? Hi, Sumita, can you hear us?
Hi, I can hear you now. So, assuming this is about the deal between the United States and India, well, several reports suggest that White House Press Secretary Caroline Leavitt, she confirmed that the United States and India are close to finalizing a trade agreement. In fact, her comments are coming in shortly after Trump also voiced optimism about finalizing a trade pact with India. She said, and I quote, the press said that last week, that India and the US are very close to a trade deal, and it is true. I spoke with the Secretary of Commerce about it. He was in the Oval Office, President, and you'll hear very soon from the President and his trade team when it comes to India. Now, remember, this is extremely significant because the trade team from India that was traveling to the United States was supposed to be in the United States on June 26th and 27th. This is supposed to be the last leg of talks before an interim trade deal is arrived at. However, these talks have extended beyond June 30th as well, as discussions remain ongoing. Remember, in this final leg of discussions that are going on between both the sides, India has toughened its stance on issues that are related to agriculture, dairy, and GM crops, because the United States is seeking concessions, not just on industrial goods like automobiles, petrochemicals, but also wants access to India's agriculture and dairy industry. And this is an industry. The agriculture and dairy industry is something that government sources told us that India has not opened up before for any other trading partner, for any other deal. Government sources also indicate that both sides are keen on doing a deal. They are very much interested in finalizing an interim trade deal. But India is not desperate. For India, protecting India's interest, protecting the country's interest, protecting the industry's interest will be critical.
Understood. And Sumita, but stay on with us. External Affairs Minister S. Jaishankar is also in the US to participate in the Quad Group meeting of the foreign ministers starting today. The meet, we believe, will focus on new proposals to advance a common vision for a free and open Indo-Pacific. Tell us more about this particular visit of External Affairs Minister.
Yes, actually this visit started yesterday, and today we can expect some engagements to happen. This will go on till the July 2nd. The External Affairs Minister is there to participate in a meeting of foreign ministers by Quad. He is there on an invitation by Marco Rubio. The External Affairs Minister will be inaugurating an exhibition as well. It's called The Human Cost of Terrorism. Now, this visit becomes extremely crucial because of a wide variety of reasons. So let's understand the backdrop of this. Well, there's going to be a strong focus on Indo-Pacific security. You remember the Prime Minister spoke to President Trump on the sidelines of G7 just a couple of days back. There are West Asia tensions that are brewing. And of course, India and the United States are negotiating a bilateral trade deal and interim trade deal. So definitely those conversations, particularly related to the trade deal, are going to come up when the External Affairs Minister meets Marco Rubio. And of course, just a couple of days back, the MEA stated that both the sides are going to review the progress that's been made on various Quad initiatives in the run-up to the Quad Leaders Summit. Quad essentially, it comprises of India, United States, Australia, and Japan. Its goal, when it first came together in 2004, was to ensure a stable, prosperous, and Indo-Pacific.
Okay. All right. Thank you so much, Sumita, for joining us. All the details and helping us with the updates on the trade deal going forward. Thank you so much for joining. Shifting focus now to the housing market then. Now, even as housing sales across most major cities declined sharply in the first half of 2025, Mumbai's property market recorded its highest ever property registrations and revenue collection in the first half of the year. Anurag Shah is joining us with all the highlights.
In Q2, we have seen a decline in housing demand all over the country, but data from Mumbai is encouraging, and in H1, Mumbai has witnessed highest ever sales in last 10 years. So in the first half of 2025, property registrations in Mumbai has crossed a mark of 76,000 units, and through that only, if we compare year on year, then state government stamp duty revenue is also up by 15%, and the H2 revenue stamp duty collection is 6,731 crore, 15% up as compared to the last year. If we talk about the June data, then in June also 11,599 property registrations as seen in Mumbai, the BMC area, with the slightest dip of 0.6%, but revenue is up, stamp duty revenue is up by 2%. Of the total registration, 80% registrations are of residential units only, and consistently every month the total number of units property registration is above 11,000 mark, and the shift in preference is also there. The demand is there for luxury homes for above 5 crore. So share of 5 crore plus properties increased to 6% from 5% a year ago. So despite slowdown in other parts of the country, the Mumbai and MMR region is outperforming, driven by strong demand for new launches and existing inventory properties.
So Mumbai recorded highest ever home sales in the first half of FY25. Anurag, thanks so much for joining us with all those details. But shifting focus to some macroeconomic data then, India's industrial engine is clearly losing steam. Industrial production for the month gone by grew by just 1.2%, which is at the lowest level that we have seen in the last 9 months, dropping sharply from 2.7% that we registered in April and 3% in the month of March. Experts point to subdued consumer demand and sluggish momentum in core sectors such as which were the key drags on growth for the month gone by. Varun Dubey is now joining us with more details on exactly this. Varun, over to you.
Well, the May IIP numbers are at 9 months low and it has come at around 1.2%. The street was expecting around 2.3 to 2.4%, and the lowest estimate on the street was around 1.5%, and it has come lower than the lower estimate of 1.5%, that is 1.2%. Now even the April IIP numbers, they have been revised to around 2.6% from 2.7%, and the overall drag has been all the major sectors. Mining, that has reduced by around 0.1%. Even the manufacturing has slowed down to around 2.6%. It used to be 3 to 4% in the previous months, and also the electricity sector, that has reduced by around 5.8%, which has been the biggest drag. If you look in other sectors, the overall consumer demand, that has been a drag wherein the overall consumer goods IIP, it has been slipped to negative zone of around 1.7%. The urban demand, that has contracted, it has come at around 0.7%. It was 6.2% in the month of April. And also the rural demand, if you look at that, that has been in negative zone for 4th consecutive month, and in this month it has contracted by around 2.4%. So this has been the biggest drag in the overall IIP number. Although if you look at the capital goods IIP number, that has been good for the 2nd consecutive month. This month it has risen by around 14.1%, and in the month of April it has risen by around 14%. So other than capital goods, majority of the sectors, if you look, there has been a drag, especially the consumer demand has been a drag, and electricity and manufacturing has been the biggest drag in the overall IIP numbers, which has come at around 9 months low.
All right, thank you so much, for Varun, for getting us that IIP trend for the month. But moving on, let's also get you an update on the monsoon. Now, monsoon has raised across the country 9 days ahead of schedule, one of the fastest advances since 1960 as per the IMD. Now, cumulative rainfall is now 8% above normal, with northwest and central regions drenched in surpluses of 37% and 24%, while the east and northeast face deficits. And the July forecast predicts above normal rain overall, though northeast and extreme south may see shortfalls. Now, maximum temperatures, they are expected to say normal or below normal in most regions, giving some relief from the summer heat.
And shifting focus to some national stories then, Prime Minister Narendra Modi will embark on a multi-nation tour from July 2, marking several historic firsts. He will visit Ghana on July 2 and 3, the first Indian Prime Minister to do so in 30 years. On July 6th and 7th, he will also attend the BRICS Summit in Brazil, themed Sustainable Growth. He will then visit Namibia on July 9, the first such visit in nearly 27 years.
Next up, the national capital has now pulled the plug on the end-of-life vehicles, with fuel pumps set to deny fuel to old polluting cars and bikes. Fuel stations will soon have cameras to scan and identify these vehicles, enforcing the crackdown.
Former India skipper Mahendra Singh Dhoni is looking to trademark his iconic title Captain Cool. The application, which has been filed with the trademark registry, aims to cover services like sports training, coaching and training facilities.
All right, those are some of the national updates we are tracking this morning, but it's time now to take a short break on this edition of Market Cafe. We'll be right back with more news and updates on the other side.
Named chairperson, Fed's chairperson. US Treasury Secretary Bessent also declared inflation very tame and hinted at possible rate cuts ahead. In an interview, he backed the Republican budget bill, calling it a first step in tackling US debt while boosting economic growth. Bessent also took a swipe at the Fed's 2022 rate cut moves, calling them a gigantic mistake, but also said he'd support the president's choice on future Fed leadership. Meanwhile, he predicted a flurry of trade deals before the July 9 deadline.
And Elon Musk is not backing down. The Tesla and SpaceX CEO blasted Trump's massive tax and spending bill, calling it debt slavery and threatening to unseat any Republican who supports it. Musk, who previously poured nearly almost $300 million into backing Trump and GOP candidates, now says he will fund primary challengers to punish the so-called fiscal conservatives who are sold out. US-Canada trade talks resume. Prime Minister Mark Carney has revoked a controversial digital services tax targeting American tech giants just hours before it was to take effect. Now, the move comes after US President Donald Trump abruptly halted trade talks, calling the tax a blatant attack and threatening steep tariffs on Canadian goods. Canada's now withdrawn 3% levy on firms like Amazon, Meta and Google would have cost them over $2 billion annually. Ottawa says it prefers a global solution on digital taxation. With tensions easing, both nations are back at the negotiating table, aiming for a new trade deal by July 21st.
Meanwhile, Mark Zuckerberg is doubling down on AI, announcing mega superintelligence labs to supercharge his company's push into advanced artificial intelligence. The new unit will bring together Meta's foundation model teams and open source projects like Llama under the leadership of heavy hitters Alexander Wang and Nat Friedman. With rivals like OpenAI and Google in hot seat, the Meta's aggressive AI talent hunt includes massive signing bonuses and a $14.3 billion scale AI investment. Amazon CEO Andy Jassy says generative AI will mean fewer people doing some jobs as automation takes over routine tasks. In an interview, Jassy also argued that AI will free workers from rote work and make roles more creative, but also admitted Amazon's corporate headcount will shrink. While Amazon will keep hiring in AI and robotics, Jassy also joins other tech chiefs warning that headcounts will drop as AI becomes more central. And NASA is blasting off to Netflix. Starting this summer, the agency will stream rocket launches and spaceworks live on Netflix in a push to inspire a global audience. The programmer will stay free and ad-free on NASA's app and website as well. The move comes amid a record pace of launches. Remember, SpaceX alone had already logged nearly 81 this year.
All right, then shifting focus to the auto space then, well, it's that time of the month again when auto dispatch data will start trickling in. And once again, it is expected to be a mixed bag as two-wheeler sales remain healthy on the back of rural recovery and wedding season demand. But PVs, they could remain muted amid lower inquiries and delays in conversions. Srishti is joining us with the preview.
Well, yes, this time around for the month of June, the auto sales is expected to be a mixed bag, while some of the sectoral trends what we are picking up is that two-wheelers as well as tractor, these segments are expected to do well on the back of push from the rural sales specifically and the marriage season sales as well. When it comes to passenger vehicle segment, not much of an expectation here. Why so? Because for months now we are seeing that the passenger vehicle sales has been lagging behind, and what we are getting to understand this time is that so many queries that are coming in, they're actually not getting converted, and the OEMs are rather pushing discounts to actually help boost the demand. When it comes to commercial vehicle segment, yet again a subdued response in the month of June is what we are picking up from the dealers. Let's talk numbers then. Firstly, from the passenger vehicle segment, what we are getting to see that across the board, be it from Tata Motors, Maruti Suzuki as well as M&M, we can see a decline on a month-on-month basis when it comes to the auto sales data, and key to watch will be M&M, wherein the dealers are anticipating or rather highlighting that there could be a fall of 7% in the sales data this time. Well, that will be interesting to see whether or not M&M manages to surprise us yet again. When it comes to the two-wheeler space, here in TVS Motors as well as Ashesha, these could be the outperformers, while for Bajaj Auto as well as Hero MotoCorp, not much of an expectation, but Hero MotoCorp will definitely watch out for the commentary on the rare earth issue as well, and so will be the case for TVS Motors as well. The commercial vehicle segment, there has been a subdued response for month-on-month basis for all the companies. Not much of an expectation is what we are building in, but expectations are building in for tractor segment. Once again, a good response and the sales data is expected out of them. A double-digit growth is what we are expecting for the likes of Escorts as well as M&M. For Escorts, we are expecting an 11% jump in their sales, while for M&M a 25% jump is what we are expecting, with sales close to 51,000 units.
So that's as far as auto sales data is concerned, which will be released today. But Shrishti, stay on with us because Apollo Hospitals will also be in focus because the board has approved separate listing of its omni-channel pharmacy and digital health businesses within the next 18 to 20 months. This move is a part of a larger reorganization effort which is aimed at unlocking value. Tell us more about this particular deal.
Well, yes, Apollo Hospitals will be in focus today as the company has announced that they will list their digital and pharmacy business in the next 18 to 20 months, being a separate listing altogether, wherein the business will include Apollo 24/7 and the pharmacy chain Kim. And in the new health company that will be listed in the next 18 to 21 months. It is one of those major value unlocking moves that Apollo Hospitals will take. It will actually do two things. Firstly, it will help the company list one of their largest omni-channel healthcare platform. That will be the new health company, combining both of these entities, and along with that it will actually help the value unlocking of their hospital business as well. Now when it comes to what will actually be there and what ratio and what share swap could actually be in play, then the shareholders of the new health company will actually receive 195.2 shares of the new firm for every 100 shares of Apollo Hospitals that are being held now. No capital infusion is needed now, and Apollo Hospital will actually retain 15% and one board seat in the new health firm. Along with that, the company has set very ambitious and good targets rather for the new health company in the next 2 to 3 years, wherein for FY27 they are targeting an overall revenue of 25,000 crores versus 16,300 crores in FY25, and along with that they also aspire to double their margins from 3.5% to 7% by FY27. Now, Apollo says that the health company already turned EBITDA positive in FY25, and the analysts do see this as one of those value unlocking moves. The company did not share the IPO timeline then, but now that we are seeing for the past 1 to 2 years, the company has been taking so much of restructuring to actually simplify their overall structure at play, and now this value unlocking is being announced. The company do say what is the rationale of this particular move. They are saying that they want to create India's largest omni-channel pharmacy distribution and health digital platform. There will be continued synergies that will be at play for both of these companies, and dedicated leadership and management team will take both of these businesses ahead. So that's about Apollo Hospitals. Definitely a big news coming in all the way.
All right, thank you so much, Shrishti, for getting us that latest on Apollo Hospitals. But with that, we're completely timed out in this edition of Market Cafe. It's a wrap from our side. It's a goodbye from me and Ashesha. But don't go anywhere, as the market will take all the action forward.
From power corridors to corporate boardrooms, from courtroom battles to startup breakthroughs, this is the team that powers ET Now's news engine, tracking consumer